It's a very divisive issue. Some people, even in Fukushima, are actually in favor of disposing of it into the sea. But as you say, the fishing groups are particularly worried about this. They're only just now beginning to recover from the effects of the tsunami and the nuclear disaster, which kind of ruined their business. There used to be busy fishing ports in that area. So they're strongly against it. As you say, South Korea has also protested strongly against this move. And yesterday we saw China also finally weigh in, urging Japan to take a responsible stance in terms of the world, in terms of Japan's own people. But we still have to wait and hear some details about how exactly this disposal will be done. I believe the water is going to be treated over again to remove any more trace elements of contamination. And the government says it's safe and it is in line with international guidelines.
Isabel Reynolds there with the latest on that story in Tokyo. We do have some breaking news at the moment when it comes to the Buy Now Pay Later platform. Zip here in Australia with their quarterly trading update. We are seeing a statement from the company saying that business continues to accelerate and grow. The third quarter revenue coming in at an increase of 80% year on year at just over 114 million Australian dollars, I should say. Quarterly transaction volumes coming in at 1.6 billion Aussie dollars. Saying when it comes to the US business, which has been a key part of their expansion plans, delivering significant growth in what is seasonally considered a quieter period, of course, after Christmas and the festive spending period. We will, of course, be speaking to the COO of Zip, Peter Gray, a little bit out. We'll be getting his view when it comes to the outlook and the performance over the past quarter. But certainly that revenue number, a third quarter increase of 80% year on year. Got another big interview later on with the largest online higher education company in India. Upgrad is a Mumbai-based startup. Its co-founder and chairman will be joining us exclusively. Well, coming up next, we get insight on the impact from Alibaba's record fine and the outlook for Chinese tech. J.O. Warren Capital founder Jingheng Li joins us next. This is Bloomberg. counting down to the start of trade in Tokyo and Seoul, Japan's vaccination drive has finally kicked into high gear around 4 months after the start of inoculations in the US and the UK. Shots for over 65 starting on Monday. On the eco front, the country's machine tool orders jumping the most in over a decade in March, an encouraging sign of recovery for the nation's factories. But Mitsubishi Motors now feeling the impact from the global chip crunch. Nikkei reporting that the company will cut output at factories in Japan and Thailand by 7,500 units in April. Over in South Korea, President Moon Jae-in holds a cabinet meeting in under 2 hours with newly elected Seoul Mayor Oh Se-hoon to attend virtually. This is the first time for the opposition party official to participate in a cabinet meeting under Moon's government. Now, the Bank of Korea is also releasing monthly money supply data at noon local time. Do watch out for that. Also, Kakao's Webtoon and movie-making unit, the latest South Korean company exploring a U.S. IPO after Coupang's blockbuster listing in March. Heidi. Well, Chinese regulators, Sherry, we've been talking about forcing Jack Ma's Ant Group into an overhaul. That means it'll be supervised more like a bank, and the move comes just days after Beijing hit Alibaba with that record $2.8 billion fine, which investors saw as an expensive slap on the wrist. Alibaba's Hong Kong shares closed 7% higher on Monday. US shares actually were up close to 10%. Let's get more from our Chief North Asia correspondent, Stephen Engle, who joins us with our next guest. Steve.
Yeah, we've been covering this, of course, very extensively, and I want to bring in our next guest. Is Junhong Lee. She is the founder and CEO of JL Warren Capital. She joins us now from Laguna Beach, California. June, good to see you as always. Of course, this is a multifaceted story with Alibaba and Ant, and we've gotten some sort of clarity now on both of those situations after 4 months of regulatory uncertainty, of course. Let's first tackle the Alibaba story, which is probably more straightforward. A one-off big fine of $2.8 billion. You alluded to me that you think this is win-win for the government and for Alibaba. How so?
So for the private sector, I mean, I think as long as it's one-time event, it's not recurring, investors will likely to dismiss it. For the government, it is a big chunk of revenue. It's 2.7 billion. Anything in billions is considered to be a big chunk of income. So they also, inserted their power in the private sector. Meanwhile, they get a large stream of fine coming in. So in that sense, I think it's a win-win situation.
What do you still like, though, about Alibaba? Because, again, the fine itself does not necessarily change the competitive landscape. The list of rectifications, though, the steps that Alibaba must take to comply with these anti-monopoly laws could be detrimental to revenue going forward, in particular if they have to change their practice of basically forcing merchants to choose Alibaba over other competitors. Isn't this revenue negative for Alibaba?
I think a lot of negativities are already priced in. I think Alibaba right now is a rare combination of value and the growth. I mean, e-commerce is still growing. E-commerce market in China is still growing at double digits, and Alibaba is still the market. It's about 60% of e-commerce in China. And in addition to the retail aspect of the story, you get this Ali Cloud, right? I mean, it's a big tech, digitalization, infrastructure as a service, all that. So, you really have this rare opportunity to invest in both consumer consumption upgrade, consumption growth, as well as, big tech, AI, 5G, connectivity, all that. So I think, I think Alibaba is a great investment from here. And I think, as you can tell from the market reaction today, apparently there's a relief run, and I think the stock is going to just go higher from here.
But it is a warning shot to the big tech tycoons and the BAT companies, Baidu, Alibaba, Tencent. So going forward, does this not kind of have a cloud over these companies? And when you have a time when other tech startups, whether it's Kuaishou or Douyin from ByteDance, and